iBrand Television flagship business program, broadcasting to you live from our studios in Lagos, Southwest Nigeria. Now let's get talking now. The Monetary Policy Committee, that's the MPC of the Central Bank of Nigeria, has hiked the benchmark interest rate by 200 basis points to 24.75%. This is according to the communique issued by the Central Bank of Nigeria Governor Yomi Cardoso after the second MPC meeting of his tenure in Abuja. The new interest rate is a jump from the 22.75% announced by the MPC about a month ago and the second rate hike by the current committee. Cardoso announced that the retention of the cash reserve ratio, that's the CRR, of deposit money banks at 45%. However, the MPC adjusted the CRR of merchant banks from 10% to 14%. The committee also retained the liquidity ratio at 30%. Since the development, the central bank has received knocks and kudos from the business community. Now, joining me now live to discuss more on these macroeconomic issues and other fundamental issues is a macroeconomic analyst, Lamidi Olayinka. He joins me virtually from Abuja. Good morning, Mr. Olayinka. It's good to have you join me on the show this morning. Let's dive straight into the conversation. I'd like to get your thoughts. Another rate hike after the meeting that the FS Bank had in February this year, less than a month. What's your reaction to this? Currently, as it stands now, we have 600 basis points in terms of the development that the central bank have put together under the leadership of Yomi Cardoso. How do you react to this, and what ripple effect do you think this will have on businesses as a whole?
Thank you very much. Going by the numbers, right, we've seen the Monetary Policy Committee of the CBN increasing the MPC by 200 BPS, from 22.75 to 24.75. And of course, from our end, we believe this is actually a positive signal that the CBN, the Central Bank of Nigeria, is actually turning to investors, right, and ensuring that they also ensure that they stimulate confidence for the investors regarding the CBN divisions and some other funds. And of course, this will help cushion the macroeconomic headwinds that we've been experiencing for some time now. And of course, if you look at the foreign exchange, right, foreign exchange rate, right, in the official market, the foreign exchange rate in the official market is now a bit quite expensive than that of the standard of the BDS, and which is actually something that that is not prevalent before, right? So what we've seen previously is that the BDC, which is the change by or the parallel market by exchange rate, is quite more expensive than the official market, but due to improved liquidity and due to the successive increase in MPL, so we've seen MPL having impact on the exchange rate and moderating the value of Naira. And of course, currently we've seen Naira trading around 1,200 to 1,300. So I mean, this is a positive sentiment, and of course we definitely have an impact on the economy and average Nigerians, of course, and businesses as well. So on businesses, we are likely to see that this would lead to increased cost control on them, right, as they would find the cost of funding their corporations and funding their capital to become more expensive than what they are actually exposed to. So it will lead to cutting measures from their own end, and it will also control them from sourcing loan to fund some of the activities. And of course, for banks, I mean, this is actually a positive news. And however, this is actually a positive news because it would have a direct impact on their net margin. It would increase their net interest income as we see that the rates on flexible loan book for banks would also move upward, which have a direct impact on their top line net interest income. And on the other hand, for banks, you are likely to see that the loan book of banks may suffer if peradventure the loan book now later constitutes or is exposed to non-performing assets. For an average Nigerian, so we are likely to see this having an impact on the inflation rate, right? And of course, inflation is around 20%. So we are likely to see inflation having this. We are likely to see this effect having an impact on inflation, and which, of course, in the long run or subsequently, as we are likely to see conservative inflation, the impact of foreign CBN's monetary policy stance on inflation, we are likely to see that this will reduce inflation rate and also increase the purchasing power of consumers.
All right, then. Thank you so much for that insight. Now let's talk about inflation. One of the major reasons for interest rate hike, you will agree with me, is just to cushion inflation. But for the past 2 years, under the administration of Godwin Emefiele, former governor of CBN, and the current CBN governor, we've seen that interest rate has been on the high side consequently. But yet, inflation, it's not reducing. Inflation is also increasing as well. Inflation, as we speak today, is 31.72%. Do you think that with this current interest rate hike by the MPC, we're going to see inflation rates coming down anytime soon? Because from the report that we got last week, a member of the MPC actually came out to say that the inflation report for March, which will be coming out on the 15th of this month, it's going to increase as well. So at what point in the course of this year are we going to see inflation rate actually nosediving, if for any reason it will? Also, the CBN has projected a 21.4% inflation rate. Do you see them achieving this, going by current macroeconomic challenges, bedeviling the economy at this point in time?
So thank you very much for that question, right? So we honestly, I mean, this is something that most Nigerians are also concerned of. Like, why do we have to face an increase in inflation in interest rate when inflation is not adjusting? And of course, you would agree that regarding inflation in Nigeria, there are factors that is affecting inflation that is even beyond the power of orthodox monetary policy. And of course, we anticipate that the orthodox monetary policy, I mean, the orthodox CBN's move, right, will definitely have an impact on the inflation rate. So, of course, what we've seen is that there has been a consistent increase in interest rates, while the inflation will continue to, increase as well instead of adjusting. And from our own end, we think this is as a result of the structural factors that is affecting inflation, which is beyond the power of monetary policy. And of course, we definitely been seeing improvement, and in line with that, we've seen exchange appreciating recently, and of course we've also seen the CBN's policies regarding some macroeconomic matters to ensure that the price of goods and services are transacted at a favorable rate among market participants. So these are part of the concern. Now, of course, in foreign countries, we've seen relative adjustments in monetary policy rates, like an increase leading to further moderation in inflation rate, and we see this in Europe and in some other countries in North America. So we want to believe that for the short term, like, because the CBN is actually trying to ameliorate some of the impacts, some of the macroeconomic pressures that we've experienced for some time, and regarding that, it will take some time for the policy implementation regarding the stance of the CBN on monetary policy rates and the stance of the CBN on some other macroeconomic matters. It will take some time for it to have an impact on the headline inflation. So and I believe in the short term, so we are likely to see this trend continue, but in the long term, we are likely to see the monetary policy rates, the movement in monetary policy rates having an impact on the inflation in Nigeria.
All right.